Latest installment of the Faber Reports.
Thank you, Matt. I want to continue to focus on two of the stories today in the marketplace, certainly, and they are, of course, interrelated. That is the performance on this holiday shortened week of Dow Chemical and Roman Haas. Dow, of course, in a deal to buy Roman Haas for $78 a share. But there are two separate stories here, in a sense, and they are also stock stories today. Take a look at Dow Chemical. Down 18%. That's a loss in market value of about $3 billion. It's down to about a $14 billion market value. Of course, Dow's been hit by all the slowdowns in commodity markets and so much of that. So hard to predict what '09 will bring on that side of things. But as we've been telling you this morning, a long-awaited joint venture in Kuwait called K-Dow fell apart over the weekend. The Kuwaitis pulled out. And that deal was set to take effect in the new year. So that has raised questions both for Dow and for what Dow will do in terms of the deal it has in place to acquire Roman Haas. We'll get back to that in a second. But as for Dow itself, Dow Chemical, why it is down so sharply, there are a few reasons. One, all right, you got a downgrade today from Barclays. That is not the reason, but I will reference it because that is sort of indicative of what is being talked about when it comes to Dow today. They cut that to equal weight. They cite higher leverage from the pending Roman Haas acquisition. They were going to take in $7.5 billion from K-Dow. They're not going to get that money anymore. And it remains in question whether they're even going to get the $2.5 billion breakup fee at this point. As for the Roman Haas deal, though, it is fully financed. They have a one-year bridge loan. But Barclays lowers their '09 estimates to $1.20 a share. And so when you look at $1.20 and you apply a multiple to that, it gives you some sense as to why you see Dow down so much today. Of course, all of this, again, depends on things we simply don't know. There is also concern about Dow's dividend. Why? Well, it costs the company $1.5 billion a year. And earlier I was referencing some of the loan documents related to that one-year bridge facility that they're using to buy Roman Haas. You got a dividend that costs $1.5 billion a year. You have a one-year bridge loan which has, let's call it a harsh payment schedule. And it also has covenants, that is the bridge loan, that if they are tripped, and of course they haven't been, it hasn't even been funded yet. And who knows if it's going to be tripped, but here are the covenants. You got to stay above investment grade. If you fall below investment grade and your leverage ratio is greater than 4.25 times to 1, that is EBITDA to leverage, or leverage to EBITDA, then you trip the covenants. You accelerate payments. That's not good. So that is bringing people to say, hey, you know, maybe would Dow have to potentially consider cutting their dividend to conserve capital as they move into the Roman Haas deal? That, of course, is the other key question. It's a $78 all-cash deal to buy Roman Haas. It was negotiated some time back. The merger agreement on this deal is airtight, I am told, by people who are very familiar with reviewing these things. Nonetheless, you're talking about a company, Roman Haas, that would probably trade, let's call it 20 to be generous. So here you have it. 30 up and 30 down is basically what we're talking about here for a deal that, by the way, could close as soon as January 8th. They haven't gotten Hart-Scott yet. What is Dow going to do? Are they going to try some sort of desperate attempt to get out or get a price renegotiation on this deal? Or are they stuck doing it and therefore stuck with the huge leverage that they're going to be taking on to do it? Roman Haas has put out a separate press release saying, hey, K-Dow falling apart has nothing to do with us. Dow's not talking. We have asked the CEO, Andrew Liveris, to come on quite a few times in the past, to come on this morning. So far, the answer from Dow is he is not available. Matt, let me send it back to you.
Amazing, David. Thanks. Roman Haas was in the top 5 performers in the S&P going into this session. It is now one of the few that actually had a positive year is now off that list. So, amazing. All right, David, thanks. Sure. Appreciate it.